What is up, everybody? This is Books of the Stock Market. I hope everyone is doing well. This is the Sunday report where I cover the top articles from Monday through Friday. At the end of each article, I'll be giving my thoughts on how the article could impact or has impacted the financial markets. Without further ado, let's get into this week's Sunday report. Throughout the weekend and on Monday, cryptocurrencies dropped a lot. Bitcoin dropped to $49,865 from $55,000. That is about a 10% correction. However, Bitcoin is still up 90% from this year's low of $27,734. Ethereum was also down a lot. After Ethereum broke the $2,000 level, it dropped to $1,600. That's a 20% correction. Personally, I believe the move downwards was obviously caused by the equity markets tanking. The equity markets were tanking due to yields rising. I still believe that there's more downside to this move, as when a correction happens in crypto, it usually can go all the way down to a 30% decrease in price. Time to hodl. On Monday, the S&P 500 and the Nasdaq closed in the red due to recent gains in treasury yields. On top of that, big growth companies, especially those in tech, were falling a lot. The Nasdaq was down 2.63% for the day, while the S&P 500 was down 0.77%. Blue chip stocks seem to do a lot better as investors are looking for safer places to put their money. For instance, Disney has been on the rise ever since they beat earnings. Jerome Powell is expected to speak on Tuesday in front of the Senate Banking Committee. I predict that Powell will just reaffirm his stance on continuing stimulus and that inflation will not be a worry. Hopefully, this stems the bleeding in the equity markets. Powell's speech on Tuesday went as planned, where he gave the same generic answers that the economy will keep doing well, so there's no need to worry. However, there was this one question that Senator John Kennedy asked. If we don't pass the bill, you're cool with that? Jay Powell stated that he will not give an opinion on it as he has consistently not taken position on this bill. This response was different from the one he gave when Trump was passing stimulus bills. In the past, he said that he will welcome the work the Congress is doing. So this change in position, or more accurately put, having no position on this topic, is somewhat interesting. The stimulus plan was approved by the U.S. House of Representatives Budget Committee on Monday, and it will be sent to the House and the Senate very soon. For now, it is hard to make out what Powell is saying. People can understand this as Powell changing his stance on huge government spending. However, it is just as likely he said he doesn't have an opinion, so he doesn't put pressure on the already shaky market. Tether and Bitfinex will be paying the New York Attorney General's office an $18.5 million fine to settle a legal dispute. The legal dispute was around Bitfinex using at least $700 million of its cash reserve to cover up a $850 million loss. They agreed to settle, but they still refused to admit any wrongdoings. I just decided to cover this article because, as you know, I have a position in crypto. Although Bitfinex seems to be at the fault here, any regulations that could potentially be made because of this case could be a bad look for crypto. As mentioned in my most recent video, I explained how regulations are the top risk for Bitcoin in this bull cycle phase. If you want to know more about it, click the I button in the top right corner of your screen. Fortunately, Bitfinex decided to pay up and not get investigated any further. On Tuesday, it was reported that U.S. bank profits fell 36.5% in the year of 2020. Profits fell due to banks being more careful with the money they're loaning out ever since the coronavirus first hit. Fortunately for the fourth quarter, bank profits rose 9.1% as the coronavirus situation was getting a bit better. Powell also stated in his hearing on Tuesday that he's unsure if the central bank should put tighter capital requirements on banks. So far, Powell has lifted some restrictions for big banks in last April, but he also knows banks remaining afloat during the pandemic is really important, so keeping a bigger cash reserve requirement is important. I believe this was priced in, as everyone knows banks had to keep larger than usual amounts of cash due to the pandemic. Therefore, this news really isn't so bad. It will probably turn bad when we continue to see bank profits fall throughout the year of 2021. This can indicate that people are not spending even with the pandemic disappearing. The Depository Trust and Clearing Corporation created a one-day settlement period proposal. Currently, it takes 2 business days to settle trade, meaning it takes 2 business days to complete a trade between the buyer and the seller. In the hearing with Robinhood CEO Vlad Tenev, he mainly blamed the liquidity issue on the 2-day settlement process. He said that the high volume of trades and the slow settlement situation caused his company to halt trades. I thought this article was kind of interesting because we all saw how inefficient the system was during the GME spike. With today's technology, I still don't know why there's a lag between buying and selling trades. On Wednesday, major financial firms increased their GDP growth estimates due to the upcoming $1.9 trillion COVID-19 stimulus plan. Europe's biggest bank, HSBC Holdings, raised GDP growth forecast to 5% from its expected 3.5%. Other banks did the same, and all banks are saying they're expecting more consumer spending. This news seemed to be absorbed pretty well by the stock market. The S&P 500 is up 1.14% and the Nasdaq was up 0.81% for the day. Additionally, Powell continued to push the idea that he doesn't see any inflation problems and we should be focusing on jobs. He said that he will continue to promote the annual 2% inflation target until everyone is fully employed. All of this positive news seemed to be pretty well timed as the stock market was making new lows every day. Cash App saw 3 million people buy and sell Bitcoin in 2020. 1 million of them were new traders. Square is attributing this rise in new customers due to the rise in Bitcoin ever since the fall of last week. Square earlier this week also bought another $170 million of Bitcoin. Including this and Square's past investment in Bitcoin, this is only 5% of Square's total cash. Square's chief financial officer said this was an investment and not a short-term trade. Bitcoin is currently sitting at $49,608 as it has retracted below the $50,000 mark after hours. Overall, this is very bullish news for Bitcoin as every time Bitcoin dips, we see another big company step up and buy. Furthermore, if we have more companies step up and put only 5% of their cash into Bitcoin, then we can see Bitcoin easily hit $100,000 in the foreseeable future. On Thursday, the Senate parliamentarians said they do not want Biden's $15 an hour minimum wage included in the stimulus bill. Democrats are saying that they will not give up and find other ways to pass this portion of the bill. So, who's the Senate parliamentarian? The Senate parliamentarian is Elizabeth McDonnell, and her job is to limit what could be included in a typical bill. It is important to note that this rejection does not mean there is no minimum wage increase. Senate Republicans such as Tom Cotton and Mitt Romney said that they support a $10 an hour minimum wage. Likewise, not all Democrats are on board for this $15 minimum wage increase. Senator Joe Manchin said that he would prefer a $11 minimum wage. This obviously negatively impacts the market as any subtractions from the current $1.9 trillion stimulus bill would mean markets will have to price in these subtractions. Also, since this targets everyday people, we could see a decrease in retail spending as they're getting less money in their wallets. A while back, I explained IMF wanting to allocate funds for poor countries hit with the coronavirus pandemic. These funds are inside SDRs and countries a part of the IMF are supposed to vote on this issue. The country that has most say in this is the US as they are the largest stakeholder in the IMF. Today, Janet Yellen said that he supports the IMF allocating money for poorer countries. Although she supports this cause, there's no definite numbers on how much she wants to fund it. Other G20 members have suggested a $500 billion fund. She states that without further international action to support low-income countries, we risk a dangerous and permanent divergence in the global economy. The takeaway from this is that the US is willing to spend more money. This means stocks will continue to go up as government spending increases. As mentioned before, currently the markets are not doing so well due to the pushback around the $1.9 trillion stimulus plan. Although this news is not the event to cause markets to soar again, we once again can confirm that the US is willing to spend a lot of money. To wrap up the day, let's end with a fun story. When we thought Gamestop was dead, Gamestop hit $160 at Thursday's open. It was halted soon after market open and the stock fell to $120 where it was halted again. By Thursday's close, GameStop was at $108.73. It is slightly down after hours. S3 Partners said that 15.47 million shares were shorted. This is only 28.4% of the float, which is relatively smaller than the 142% peak in January. Therefore, many analysts are unsure if this was caused by another squeeze. An interesting guess to what is causing this rise in price is that people are scared to even interact with the stock. Therefore, there is little selling pressure when compared to buying pressure. It seems that investors don't want to get slaughtered again shorting the stock like last January. I believe the GME phenomenon will most likely cause new regulations to be made. Every time GameStop rises, it incentivizes the SEC to put new rules as they do not want to lose control of their precious market. It should be interesting how this all plays out. Maybe I spoke too soon. On Friday, the SEC halted trading on certain stocks. These stocks were halted due to questionable trading and social media activity. They didn't halt all meme stocks, but they halted the ones that did not file any information with the SEC. The list of stocks include Bebida Beverage Corporation, Blue Sphere Corporation, and other meme stocks. Personally, I have not heard any of these stocks, and I'm pretty sure that Wall Street bets are not funneling their money into these stocks as well. So it seems weird that the SEC are targeting these stocks which aren't even talked about in Wall Street bets. Even with this weird selection, it may be worrisome the SEC is stepping in to stop meme stocks. So what are my thoughts on this week? Yields pressure the stock market, causing the stocks to fall. Yields seem to have stepped back, however, and stocks seem to make a small recovery at the end of the day on Friday. Hopefully this recovery continues next week. Well, that's it for me. If you like this video, press the like button. If you have any question, leave a comment below. If you don't want to miss out on future content, press the subscribe button. Thanks for tuning in, and I'll see everyone next week.